Hello Dealmakers, welcome to another stock analysis video on the Dealmaker channel. And in this video, we're going to talk about Facebook. We're going to analyze the company, look at its numbers, look at its fourth quarter earnings results, and then we're going to look at the growth drivers and risks that the company will face in the future. All of this information is designed to help you make a better decision on whether you should buy Facebook stock in 2021. Right? So if you like these kinds of videos, please make sure to smash the like button for the YouTube algorithm. That helps the channel to grow and it encourages me to make more videos like this. Also, feel free to let me know what other topics you'd like me to cover, what specific stocks you'd like me to cover. I always start with the business model of a company because I feel that the more you understand the business, the better decision you can make on whether it's a good investment or not. So that's why it's important that we look at business models. And Facebook has a very simple business model. It provides a platform for communication and social media interaction and makes money through advertising. So as long as you use the platform to communicate with your friends, then Facebook has opportunities to serve up advertising for you. And Facebook controls 4 brands. So we have the main Facebook platform. Inside Facebook, there's also Facebook Messenger. And they also have Instagram, which is another social media network that is more geared towards videos and images. And then we have WhatsApp as well. So all of these are billion user brands already. Instagram has more than 1 billion users. WhatsApp has more than 2 billion users, and Facebook Messenger has more than 1.3 billion users. When it comes to income or revenue, Facebook derives 97.9% of their income from digital advertising. And that advertising income depends on eyeballs, so it depends on views. So as you probably know, advertising rates are paid either in terms of number of impressions or number of views or number of actions. So the higher the audience in a platform, then the higher the potential views that can be served, the higher the chances that there will be actions performed on those advertising. So it's very important that Facebook continues to grow its daily active users. So as we can see here, growth has been constant. It's been slowing down a bit, but that is to be expected because Facebook is already a mature platform. It's been around for a long time. So it's going to be hard to add new users. But the encouraging thing here is we can still see new additions to the Facebook platform. One thing that's concerning though is there is a dip. So there's a slight dip on the US and Canada audience. So starting on the second quarter, I think the number of active users on Facebook peaked on the second quarter of 2020 at 198 million. Then it went down by 2 million in the third quarter and another million by the fourth quarter. So I hope this doesn't become a trend because as you will see later, the US and Canada market is very valuable for Facebook. However, there are huge numbers in Europe, um, huge numbers in Asia, and the rest of the world. When we look at the ratio between daily active users and monthly active users, so it's been constant. So 66% of Facebook's, I guess, entire monthly user base is active on a daily basis. So this is what I'm mentioning earlier. So this is the average revenue per user. So worldwide, Facebook makes around $10.14 per user. But in the US and Canada, they make $53.56. So their most valuable audience are in the US and Canada region. Next most valuable is the European audience. Facebook has a huge audience in the Asia Pacific, and I believe there is a big opportunity to increase this average number of $4.05. So how did the company perform last quarter? So Facebook recently released their fourth quarter earnings results for the calendar year 2020, and they increased their revenue by 22%. The good thing here is that other revenue increased by 72%. So remember earlier, we mentioned that 97% or 97.9% of Facebook's income comes from advertising. So now other revenue increased by 72% last year, and it increased 156% year on year in the fourth quarter. We're going to look at what that other revenue is. Net income also increased 58% year on year. So Facebook is a very profitable operation. So we can see here the graph of the revenue growth of Facebook. We can see that it's usually in the fourth quarter where Facebook experiences a jump in revenue, um, mainly because of the holidays. Right? There's the US holidays of Thanksgiving, then there's Christmas season. We can also see that operating margin is healthy for the fourth quarter, 46%. There was a huge jump in net income. So like mentioned earlier, there's an increase year on year for the total, for the full year income of 58%. So that is a huge jump. So what will drive Facebook's growth moving forward? So earlier we saw that revenue went up by 22%, net income went up by 58%. Can we still expect the same growth numbers in the future? One of the more promising sources of growth is Facebook payments. So if you will remember earlier, there was a 156% increase on other revenue. And that was driven, a portion of that was driven by the launch of payments in Facebook Messenger. So Facebook is now entering the fintech space. And to take it to the next level, they formed the Libra consortium that was aimed towards creating its own cryptocurrency. That organization was dissolved. A lot of players there opted out, and so Facebook reconvened other players, and they rebranded Libra, and they're calling it DM. So now they are waiting for the regulatory approvals, and once this gets approved, Facebook will really be deep inside fintech with their own cryptocurrency. So this is an exciting development, but until the approvals are given, then this is something that's still really speculative for Facebook's growth. I believe a big growth driver for Facebook will be the shift towards 5G. So this shift has already started. We already have 5G enabled phones last year. Apple released their iPhone 12, which is a 5G phone last quarter. And 5G is not just a step up in speed. It's not just a huge improvement in latency, but it's going to enable new uses and new applications. And it could spur greater interaction, with the Facebook platform. So remember that Facebook makes money in advertising. The more people spend time on the platform, the more opportunities for advertisers to serve up promotions to the audience. So 5G is going to be huge. Some of the things that I'm imagining here is there could be greater adoption of Facebook Live, because right now Facebook Live has a huge 20, around I think 10 or 20-second lag. But with 5G, that lag could entirely disappear, creating a more pleasant experience on Facebook Live. And I know that a number of organizations already use Facebook Live whenever they're delivering their shows, their live events, and there could be more adoption of that on the Facebook Live platform. And 5G is going to be very, very important in enabling that. So again, the more time that people spend on the Facebook platform, the more money Facebook makes. They're also one of the biggest players in virtual reality with the Oculus devices. So Facebook actually has in beta Facebook Horizon. This is a virtual world that they are testing out. And imagine playing in this virtual world, with your friends. Right? This can drive up the usage of the platform on a per user basis. Just repeating on it again, the more time spent on the platform, more opportunities for advertising, more money Facebook makes. But one of the biggest gold mines for Facebook, one of their biggest assets that they haven't fully tapped yet, is WhatsApp. WhatsApp has a user base of 2 billion users, and Facebook hasn't really quite decided yet on how they will massively monetize WhatsApp. So they've been experimenting on the business end. Whenever companies want to communicate with their clients or with their users, they can do so through WhatsApp, and it's the company that pays for it. They experimented with the $1 subscription, um, but that has been turned off in many countries. So Facebook is still experimenting. They're still pouring in money into WhatsApp. They spent 19 billion to buy this platform. And there are a lot of ideas. They may want to go the WeChat model that Tencent has implemented successfully. But right now, we still don't know. But this is one of their biggest untapped assets. So I'm really looking forward to the time that Facebook can monetize WhatsApp. Right now, it's still just there. It's just an asset that is not yet contributing much to the bottom line, but it's just there. So just to summarize the growth drivers, there are a lot of opportunities for growth for Facebook. So they're moving into fintech with their Facebook payments and their own cryptocurrency DM. They will stand to the benefit a lot from the 5G shift. Then they are already a major player in Oculus and virtual reality. I forgot to mention that they actually make money. They get paid whenever Oculus devices are sold, and they make money on the Oculus marketplace as well. Then there is WhatsApp um, that's still kind of an ace in their sleeve. Facebook still doesn't have a clear plan on how to monetize that, but I'm sure there are a lot of projects or options that are happening in the background, and they are just waiting on when to unleash WhatsApp monetization. So if you like the prospects of Facebook's growth, please make sure to smash the like button for the YouTube algorithm, and that also helps the channel grow, and it helps me make more videos like this. But of course, it's not all a bed of roses. So it's not all nice and happy. There are risks that Facebook faces. Biggest of this is government regulation, antitrust proceedings. And now that we have a Democrat majority, Democrat government, then Facebook actually faces more regulatory pressure. And since this is something that they already expect, something that they are more than capable to handle, I just wish that there won't be any massive impact on Facebook's business. It's also a big risk to have the majority of your income coming from just a single line of business, which is advertising. So it's always just dangerous to have a single source of income because if something impacts that, then it's going to hurt the company a lot. Just to illustrate, Apple's iOS 14 will introduce changes that will impact advertising. So right now, the full impact is not yet known, but what Apple did is that in iOS 14, users can now say whether they want to opt in to advertising or not, whether they want to opt into personalization in their advertising. This is a move to give users more control over their privacy. So if users don't opt in, then Facebook's algorithms for serving up the most relevant advertising to them will no longer work. So this is huge. It's going to impact small businesses, going to impact big businesses, but I would believe that the people that will be more impacted are small businessmen that rely on targeted advertising. And if small business decides that, hey, advertising no longer works in Facebook, then they are more likely to opt out, and that's going to impact Facebook's revenue stream. So these are big risks for Facebook. And it's very important to weigh Facebook's past performance, their growth drivers, and the risks that they will face when you make a decision on should you buy Facebook stock in 2021. And I also would like to have other opinions as well. So let's look at what Wall Street analysts say about Facebook. There are 35 analysts that cover Facebook, and 89% of them give Facebook a buy rating, 9% gives a hold rating, and only one gives a sell rating. The average Target price is $330.94. So that represents a 21% upside to Facebook's current price. So it's a good thing that Facebook price dropped last night. So there is a buying opportunity for you guys should you want to buy Facebook now. There is a wide range on target prices for Facebook. So the lowest is $205. The median is 330, like we mentioned earlier, and the highest estimate is $375. So some of the more recent recommendations, Michael Levine gives a hold rating with a price target of $340. Jason Helfstein of Oppenheimer gives a buy rating at 350, and Heath Terry of Goldman Sachs gives a buy rating at 355. With these recent price targets, I'm confident that you have good upside for Facebook. Let's look at hedge fund activity. So hedge funds have been slowly accumulating on Facebook, but last quarter there was some sell-off that happened. So among hedge funds, Steve Mandel of Lone Pine Capital added 11%. Boykin reduced by 6%, and there's no change from Chase Coleman of Tiger Global Management. When it comes to insider action, corporate insiders sold worth zero shares. I think the activity here is more for options. So these are just, I guess, these are director options by Mark Zuckerberg, and he just cashed out because that's part of his compensation plan. So the numbers, the analyst recommendations looks good. There is a strong buy rating from Wall Street analysts with a 21% upside in the next 12 months. So should you buy Facebook stock in 2021? Well, I agree with Wall Street in this case. I actually own Facebook, and I believe it is still a long-term buy. So I hope this helps you make a decision whether you want to add Facebook to your portfolio or not. Please remember that I'm not a licensed investment advisor. These are just my opinions, and this is just for informational purpose only. I cannot give personalized investment advice. But if you like more stock analysis in the future, these are what we will be tackling next. We'll be covering Tesla, GM, and McDonald's. If you like this video, please make sure to smash the like button for the YouTube algorithm. That helps the channel grow. And please don't hesitate to share this to your friends. And also check out my top 21 stocks for 2021. Check the link below. And make sure to subscribe if you have not yet subscribed, and hit the notification bell button to be notified whenever I have new videos like this or whenever I talk about other topics in the future. So thank you for watching. This has been Ron Kagape of the Dealmaker channel. I hope you continue to make deals in the stock market. This is Ron Kagape encouraging you to make deals and grow rich, and I hope that all of your deals will push through. See you on the next video.